This video is going to show you the steps necessary to calculate value for this real estate project that we went over in class, both in Excel as well as on your financial calculator, at least the BA2 Plus. All right, so let's just do an Excel first. So you see your line of operating income for each year. We have a 5-year holding period, so those are 5 years. And then down here, of course, since we have a finite holding period, we have a net sales proceeds that we need to calculate, and we've done that. So now, I'm ready to put this together to get the DCF approach to value. So you're going to use the net present value formula in Excel, and you're going to enter in your discount rate, and this is given to you in the book. It's 11.75%. Now, the key thing with using Excel is that it wants its discount rates to be in decimal form. Your calculator wants it in just non-decimal form. So in this case, we're actually using 0.1175. In your calculator, you would enter in 11.75, and I'll show that to you just in a little bit. So we have our discount rate. Now it's asking you for value 1. So again, that's the cash flow in year 1, all the way to cash flow in year end, right? And so what we're going to do is actually, I need to, before I go and do that, I probably need to go ahead and insert maybe a net cash flow line or maybe total cash flow. Since I'm doing this in Excel, I'm just going to add these 2 lines so that it's the same for each year except for the last year of our holding period, and that we have the net sales proceeds plus our net operating income. This is our total cash flow that we want to use there. Okay, so now I'll go back to doing the net present value. And so there's my discount rate, and here's my cash flows from 1 to 5. And I get my answer, and it's 900 2013. Most likely the appraiser is going to assign this a value at $900,000. Okay, so in Excel, pretty easy. The big thing here is, remember that net present value is the present value of the benefits minus the costs. We have no costs, so by doing this calculation, we're finding the value of those benefits, of those future cash flow streams. Okay. So what would this same calculation look like in your financial calculator? So we bring this up. First thing I want to do, we're going to be using this cash flow key. If you want to clear out time value of money, you're going to hit second. And I think this time value of money just does these keys to clean out the cash flow key. I think I'm going to have to hit second and then clear right there. All right, so for the first year, not the first year, for your cost, CF0 is looking for a cost. We have no cost because we're looking for value. So I'm just going to hit enter, and you hit down once because now only happens once. All right, it's not going to ask you to get a frequency of how many times now happens. You have no choice. All right, so you just enter 0, and it's going to get used to cash flow year 1. So you're going to enter in whatever that amount is, and hit enter. And then again, it says up or down button, so we're going to get down. That's the frequency. We'll always use it once because we're using the uneven series of cash flows. By definition, there won't be more than one frequency. 91,773 for year 2. Enter that. So unless you enter in it, it's not going to be there. Right? Year 3, 94,527. You're going to hit enter. Hit down twice. See cash flow year 4, 97,362. Hit enter, down twice. And year 5. Again, I like to manually add these when I'm doing the calculator or in Excel to make sure that I'm accounting for that reversion value at the end of my holding period. So it's just something, it's just kind of a good practice to get used to. It forces you to look for that reversion value. So I'm going to add those 2 things together, and I should get that same number that we have over here when I do. And so again, I need to enter it. All right, so now I've got all my cash flows in there. If I wanted to review my cash flows, I can just hit that cash flow button again and just go through here. And so I can just inspect those and make sure they are what they should be. So now I'm ready to hit calculate NPV. So at this point, you can hit your NPV button and it's looking for your discount rate. The I is your discount rate. So this time we're going to enter it in your calculator as 11.75. So not in pure decimal form. Hit enter and then down, and it is asking you to hit the compute button. And so we hit the compute and it gives us the answer 900 2013, the same answers we got here. And again, the star right here just means that it's a calculated value. It's not something that you entered, it's something that the calculator has computed up. All right, so you get the same answer no matter where you put it in, which makes sense. This is why you always want to have two ways of doing things, Excel and the calculator, so it's really easy to make mistakes in Excel, and you'll want to manually check that using your calculator. All right, so hope that answers your questions on how to use, especially the calculator. I know the series, the steps using to calculate the cash flow, the entering and the hitting the down button, that can be confusing. But just practice. There's several practice problems in your textbook to help you out, and so just do a few of them until you get comfortable with that whole process. All right, so hopefully this has been helpful to you, and thanks for watching.